Welcome to Trading Lounge and the US indices for Tuesday, August the 24th. The stocks won't be in this video, they'll be in a separate video, so look at that in the stock section. And on the weekly chart here, we've got our guide stick here for the length of wave 1, and we're expecting wave 3 to be equal or further, so perhaps up at the 5,000, but that's a long way to get there just yet, so we'll just keep it here, and we're counting through to the upside here. So let's have a look at the count between wave 2 and 3. So from intermediate wave 2 up to intermediate wave 3 here, we're looking for 5 minor waves of 1 and 2 and 3 and 4 here, and going up for 5, between 4 and 5, we're looking for 5 degrees of minute degree here of 1 and 2 in blue, and 3, 4, 5, and for 2 here we're looking for 1 and 2 in green, 3, 4, 5 for the third wave, and between green 2 and green 3 here we're looking for 5 waves. So we've got wave 1 here, we had a pullback to the 50% retracement level, which we picked up yesterday and nailed that in there nicely, and up for wave 3, 4 and 5 here for that. Let's cruise into the intraday on the 2-hour chart. So a bit of a series of from that wave 4 here of 1 and 2 and 1 and 2 and 1 and 2, and then building from wave 2 here to wave 3 here. We would want roughly wave 3 here. This is the length of wave 1 roughly. We'll sort that out a bit later, but we would want wave 3 to be that length at least, so we can put wave 3 up here for that. We'll need to edge these higher here of course, but looking good at this stage, so just put these out of the way a bit, push them along. So yeah, so that's sort of where we are, and we looked at getting that low in there yesterday on that 50% level, and that's moved up nicely. So we'll need to look at this particular structure here in a little bit more detail. I think if we looked at that on the 15-minute chart or the tick chart, but we'll have a look either way. We did look at it on the 15-minute chart, so I'll probably need to just rearrange this a little bit here and give this some thought. Even if I've got the degree of structure on here, we won't be too far out for all of this anyway, so we'll be looking at something of this nature, and wave 3 up here for that. Further to go. The main issue here that I find, it's not so much the count, it will be this number here, the 4,500, because it's a minor level and 5 is the second strongest number. So we're likely to see something of this nature here across that level here. So at the 4,500, the arrival, the reaction, first high above the level, then the ABC correction, then finding support and moving up. If that's not the case, then we'll get the variation of that, which is where it doesn't drop back below the level here and just moves up, but a little bit rare that, but in more of a really bullish market that can occur. And you know, we are in, when you think about it, if we go back to the, say, 2-hour chart here for a moment, we've got 1 and 2 and 1 and 2 and 1 and 2, so we're in the third of the third of the third of the fifth wave here, so we should see this chug along quite nicely, and it's starting to do that. And week of course, so that will be on Thursday and Friday, and yeah, so let's see what the structure looks like on those dates, because obviously the news of any change in tapering, kind of the same thing really. Yeah, well, that'll come out on Monday, and you know, you get hit from that, so just watch your exposure over that. We'll talk more about that, but as I mentioned last week, and I'm not an expert in this, but the Feds haven't really given any clear signal that they're going to be reducing the situation until next year. They'll look at it next year, maybe, you know. So let's just go to the tick chart here for this. Just want to check a few things label them in my own time, so because my aim is to make the videos shorter. The trouble is can't stop yakking. So that's going to be here somewhere. I'm just going to double think it's probably there. We'll need to check on that. That can just go there. So we'll be doing a few adjustments like this until we get it sort of nailed a little bit. I'm not even sure if that's right there, but it certainly looks sort of 30 wavy there for that. Moving up. We'll get that damped across the 4.5, so just once you're aware of that, that's all good. I'll just leave these out of the way because they'll just get pushed back over here and close the platform. So that one there, take this one. So yeah, so kind of expect some sort of thing like this here across this level. I've probably dramatized it a bit too much, but the other point here too is that we've got, in terms of the trading levels, that's the midpoint of 500 there, and then we've got group one above, so 10, 20 and 30. The idea of these, when the market makes that first high above the level, these levels here, 10, 20 and 30, place selling pressure on them and push them back down, but then group 2 plays out in support here. So you just need to visually be able to see that you've got support over here for that. So I'll leave it at that, but just a quick recap, and we can do that on the I think the 2-day chart here would be probably better for this. So the point being here is that it looks like we'll be moving into a strong part of the structure, so there's probably good news coming out this week. It could be sort of, buy the rumour, sell the fact type of thing, so that might be going on here for this. But at the same time, the SP 500 has got the 5,000 in mind here now, in view rather, so that's where we can be heading for all of this. Adjust those later. So yeah, looking really good. So the hurdle is just this 4,500 at that point. Okay, so that's the main point there. A quick look at the Russell. So I've got 2 counts for the Russell. This one's probably incorrect, but we'll look at it the same. So we're looking at an A wave, a B wave and a C wave here for the A wave, and then up for the A wave, a B wave and a C wave here for the B wave. So more complication like this here. The other point is that that bullish count that we've got in play also, which we've had for a little while, is also in play, which we looked at yesterday, and that was a bit of a long shot, but still keeping this wave 4 here and looking for wave 1 here with an A and a B and a C for wave 2, and then up for 1 and back for 2. So that's played out quite nicely there. So I'll just need to have a closer look at that. I don't know if that's, it's sort of right and sort of wrong. Let's just go to the tick chart and quickly have a look if I've got something here on this. We did some work on this. I don't know if I showed you this, but what I just want to do is just have a quick look in here. So we've probably got this as wave 1 here and wave 2 here, but I'm going to have to do some work on this. But anyway, as you can see, it's bullish. Can we even use that? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So it's got to be wave 4, but it overlaps wave 1. So I'm still 1 wave short there. What's the best thing to do there? What does this look like here? 1, 2, 3, 4, 5. It is giving me that 5 waves down. I know I can look at it in a corrective move. When the let's just check on the Nasdaq for this as well. So with the Nasdaq, just on the weekly chart here, we've got the length of wave 1. I should probably be doing that more vertical, but it's just quicker to do it that way. So wave 3 would put us at 16,000. That needs to be 16,500. That's the medium level there for that. Bit of an odd number, I know, but you'll see it sort of dance out there. The 16,000's important, and the 17,000's important, but the 1650 creates a balance between the two of them, and it sets it up for nice for trading, but otherwise 18 and so on. But with this, once again, this wave 3 is too short in this move here. So let's just cruise into the daily. So there should be more to the upside here. So we looked at this yesterday, so that's just the daily chart. We're looking for this wave 5 here. I think there's much more to go here, and in fact we'll probably have to put this wave 4 here as wave 1 here and 2 here, and then 3 and 4 and 5. So we'll see how that sort of plays out. That's the 1650 up there. Obviously the 16 is going to play out as well here, and so with the 17. We've got our Jackson Hole thing here as well. We don't want to forget, but we'll take that off because we're in that week now. Yeah, so let's just cruise in here a little bit further. Think about this for a moment, where we were. I think we can go to the hourly chart and then the tick chart for this. I think I'll just go to the tick chart. Bring in a bit more data. Okay, so this is where we were yesterday. I think I might have changed that from green to this one, but we're certainly on our way here. And this pattern here is quite interesting, isn't it? It's really this pattern here. So at the arrival, the reaction, the first high above the level, and squared off here. So it's always important. I know it's hindsight, but there's lessons to be had if they're repeated enough. Once you get it's all about the first high above the level, and you draw a line across there, and that's your entry. You can get a better entry here, and if it drops below here, then you can get a better entry when it comes back here. But this is the pattern that occurred at the level here. So the arrival, the reaction, the first high above the level, it sat squarely here. So you go long above here. You could have gone long a bit earlier than that as well, but yeah, you get the picture for that. So one of the main points here now is that for 15,000 we've got 1, 2 and 3 that make up minor group 1, so we want that as tested support here. I can see that, I'm not sure to count this as 1 and 2, I can see 5 waves in here as 1, 2, 3, 4 and 5, but I don't think this is the case. I think it's more of a case of wave 1 and 2 and 1 and 2, and this is the third wave, so a bit of a dance in the fourth wave, so a series of fourths and fifths to go up here, but this is going to continue to the upside. So I want to have a quick look at the US dollar index and the yields. So this is the 10-year bonds here, and this is a daily chart here. So we've got wave A here. We're looking for wave B down here, and then wave C here. Now, to make wave 4 in a bigger picture, so we could just quickly go to the weekly chart to check that. So this is what I'm thinking here as an A and a B and a C for wave 4. Now, if this is just going to cascade down here, right, then we need to be aware of that as well. So it will be a process, and we'll know, going back to the daily chart here, just to get things here into perspective a little bit. So 5C of B, what we're basically looking for here is from wave A to wave B. We need that in 3 waves, not 5 waves. So we can look at the A wave here, the B wave in orange here, and the C wave here. So once that move comes down here, that will give us the C wave. Now from the C wave, we can move straight up to the C wave up here, or we're going to move up to the wave 4 of 1 lesser degree, or 38.2% retracement level, essentially a bounce off this level of 1 here being the strongest number in the market. So we're either going to get a wave 4 coming back, so this orange wave will be wave 1, 2, 3 in orange here, 4 in orange, and then 5 in orange. If we get 5 waves down here, then we're going to keep continuing to go down. But if we get to this point here, we start seeing impulse wave moving up through here, then we know we're going to be testing these old highs again. We'll probably go up to 2 or somewhere up into that space. Okay, so that's the bigger picture of things. In the smaller picture of things, as you know, if you've been watching this, we got these 5 green waves down to wave 1 here, wave 2 here, that can sit in here, and then another 5 green waves to make wave 3 here, and we've been working through wave 4 here a little bit messy, so I haven't really pulled this apart. This here looks corrective, so that wave 2 could go over there. This could be wave 1 and 2 here, but it does look impulsive, so I'll give it a bit of time, but we're kind of looking for it to pull back here further for that. So that's our plan there. And for the DXY here, we're looking at, well, a top in place really. So this is just the 4-hour chart. So we're counting, bring that down. So we're counting this as 1 and 2, and 1, 2, 3, 4, 5 for the third wave, ABC for the fourth, and up for the fifth. Now, even though we're starting, we pick the top and we're getting the turn here and it's coming down, I still don't have enough evidence to say that that's a top in play, okay? I mean, it's looking good, but we'd still need to see not only a 5 wave, we need to see not very good at drawing with this, but basically we need 1, 2, 3, we need 5 waves down here, and then there'll be a retracement after that, then another 5. That would only give us an ABC pattern, so we'd still need another 5. So in a way, we need to see 1, 2, 3, 4, 5, something like that. But that's well, we're just here, so we'll either need something like that, or we'll need to see a breach of at least this trend here. So that is the 50-60% retracement level. That looks a bit short, isn't it? I've got that 50-60 on it. We'll need to see a move below that. Anyway, if we can get 5 waves to the 61 point, if we can get 5 waves to this point here, then we know that we're on our way. We've got wave 1 at that point, we've got wave 2 here, and we can start bringing this down then. So that's another way to kind of get the right look and feel about the situation. But yeah, that's where the dollar index is. So in the bigger picture here on the daily chart, for this, in a nutshell, we're looking for, so we're picking that top in here. We know that this move here is corrective, so we've got an A wave, a B wave, and a C wave up here. So we really want to see the market turn down. This is our target area up here, so we're just touching the target here. So yeah, look, that's the picture. We need some evidence for that now. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.